It's time to explore the financial benefits associated with the modern-day oil boom that is sweeping the nation. Get ready for Crude Awakenings with Brandon Cox.
Out in the field, a project's value is really value based on two things. The first thing is how much oil is the project producing? How much natural gas is the project producing? And based on the production, you get paid obviously on the cash flow side of it when you take it to market and you sell it to the refinery, and you get paid on whatever the commodity price is at that time. But let's just say each barrel is worth $60,000. So if you and I are out walking in a hay meadow out in the middle of nowhere, Kansas, and we come across this oil field and it's producing 10 barrels of oil a day, and you look at me and I look at you and we say, hey, let's buy this thing. We can do that, but how do you determine what is it worth? What's the price tag on it? Well, the first thing we're going to ask is how much oil is it producing on a daily basis? Well, 10 barrels a day, the market, based on current prices, that could be anywhere from $50,000 to $80,000 a barrel. But let's just say it's $60,000. We know that if we're going to pay retail price for this project that we just stumbled across, we better get our checkbook out, and we're going to have to write a $600,000 check if we're going to pay retail for it. Now, that's part of the value of the project. The other part is having engineering studies done by a third party, that just like an appraisal on a house. If you're buying a house or selling a house or refining a property, whatever it might be, you have a third party come in and they're able to take the records from cumulative production from the surrounding oil projects in the general area, and they're able to determine how much recoverable oil is still in the ground. The Department of Energy is going to say that you can recover 20 to 30% of that number, but just to play it safe, that estimate, that value that independent third party gives us is only based on a 10% recovery factor. So if you're good at what you do, you can obviously get more than a 10%. So you want to package this thing up, or you want to buy this project, you got to look at the current production and what it's producing on the surface, but then also subsurface, what's still there, what can I still recover? And you take those two estimates, those two values, and you put them together, and that gives you your spot-on value of that project. So what we're doing out in the field with our projects is we're increasing production, but we're also proving up what we call behind-the-pipe opportunities. Other reservoirs, other producible oil and gas zones that in the past may have been overlooked for whatever reason. That might just be because of the technology at the time. That might just be because they didn't have enough money to open up the other zones. Whatever the reason might be, we're able to go in and increase value by increasing the production of what's showing up on the surface, but also by using independent third parties able to establish how much recoverable oil is still underground. And these appraisals, they cost $50,000, $60,000, $70,000 depending on the size of the project, but that becomes your benchmark that you can either buy a project by or sell a project by. And when we package our projects up and we sell them off to larger oil companies, that's kind of how it works.